page right here. They just come forward to the next page, and instead of a transaction, you just write brought forward, which means from the previous page. You put a check mark there because there's nothing to post or anything like that, and you rewrite those totals in there. Nothing to that, right? And then petty cash is a little bit different type of transaction than we've been used to. And what they have you do is you're going to fill out a petty cash report when you go to replenish it. And a custodian doesn't mean like sweeper of floors, it means keeper of something like that. And the keeper of the petty cash fills out a report every time they replenish it, just to help us keep track of where that money's going. So we're going to fill out a petty cash report. It tells us that the date is March 27th. So we are 3/27. It says the custodian is Kevin Tomlinson. And the initial amount we start with is how much? It says $200. So I'm going to start with 200 right here. And what have we spent this money on? It says we have supplies office is $45.23. So over here I'm going to write supplies office. $45.23. I have supplies store.
You can explain the difference between supplies store and supplies service and supplies.
Well, they keep track because let's say you have, even in any business, you have supplies. All right, let's say you're in the carpet laying business. Okay? You have supplies that you need to operate your business. Tack strip, glue, staples. Those are supplies that you run your store with. They like to keep those separate than the supplies that you run the office work with. So the people that send out the bills, they are buying ink for their printer. They are buying envelopes. They are buying stuff in the office end. Yeah, so these are basically supplies that you use to operate your
personal business.
And then these are the supplies that you use to in the office. All right, so the people that aren't like on site, you know what I mean? All right, then it says you have miscellaneous expense of $49.25. And it says a cash count shows that $40.59 is left in the petty cash box. Okay, so the actual amount of cash, so we'll figure it up like this. We need to add these three up. Austin, you on that? 160, 66. 100% positive.
160, 66.
Okay. So we take our $200 that we initially had, we subtract 160, 66, and this gives us the amount of money we should actually have in there. And that is $39.34, right? Correct? Okay, now it asks for the actual amount of cash on hand. Well, it tells us that when they counted how much is left in there, they have $40.59. Why would you ever have a difference? Yeah, someone messed up. If I send Zach down to Staples and say, hey, go buy pens, and he takes a $20 bill out, and he goes, he pays, he puts his change in his pocket, he comes back, and he puts the receipt, and he empties his pocket and puts that money back in. I'm sure there are times when maybe Zach already had like some change in his pocket, and he grabs some change that was already his and just throws it in. And he puts actually a few cents more than he should have. Or he reaches in his pocket and you know what, he doesn't quite get all the change out. You know, he misses a dime because he's got deep pockets. And so he's just a little short. Normally you'd use a checkbook, but if, let's say, the boss is gone and he's not there to give you a check to write a check.
Why not just use like one of those bags that like has a zipper and get cash in it?
Well, that would be something you could do, but then you're gonna have to buy bags to put cash in it with the zipper on it. You could do that. You're right. But most people don't. So we have a slight differentiation in the actual amount that's in there and what should be. So do I have too much money or not enough money?
Too much.
Too much. So this 160.66 goes over here. And the difference between these two is how much?
65 cents.
It looks like $1.25 to me.
Oh,
So if I take 39 minus 40, am I going to get a positive number or a negative number? 39 minus 40?
negative.
Negative. So I get 125, and to signify that it's negative, I'm going to put it in parentheses. Okay? And then that number comes over here. So if I combine a positive 160.66 with a negative 125, I get what? 159.41. So that's the actual amount of money that I need to put back into the petty cash account to get it to exactly 200. And this amount that's different is called cash short or cash over. And if it's cash over, it'll be in parentheses. If it's cash short, it's not. So if we were $1.25 short, I would take 160.66 and I'd have to add 125 instead of subtract 125. And then you record that in the cash payments journal like they have up here. I don't know why they did it for you, but they did. So this is my replenishing the petty cash. I've got my supplies office, supply store, miscellaneous expense. Since there's no specific account headings or column headings for those, I use the general. And then my cash short and over, it's over, so that's a credit. If it was short, it'd be over here. So I'm going to take all of these minus that, and that's going to give me 159.41. See where we get those? And then it says they want you to total, prove, and rule the journal now. So all I do is draw a line. And this is on the 31st. And this would be totals. I tell you what, I will add two of the columns. I will add accounts payable debit.
You're just too nice. Yeah.
And I will also do purchases discount credit.
I just looked at the ones we have to do, and they don't have, is it in the book? Because I looked back and there's like a page where it has the cash register.
You got a general debit for me, Austin?
No, yeah. I didn't.
These ones are pretty easy to add. You get it?
No,
Well, what the heck?
didn't. Dude, it's in. $18,647.51.
Okay. And before I double underline that, they give me a little chart down here that they want me to check to see if I'm right. So this is how you prove cash. You take your debit and credit column totals and you see if they're accurate. So my general debit is 18,647.51. My accounts payable debit column is 16,483.50. General credit is 459.81. My purchase discount credit is 251.34. And then I have 34,419.86. And I'm going to add those two together and see if my totals are the same. $35,131.01. So 1 0 2 $35,131.01.
Yeah. Wow.
So I'm right on. So once I'm right on, I give it the double underline. Because I know I'm correct.
Put it in.
Okay, move it right to 9.4. Get this done. Okay, there are some transactions that do not fit in the purchase journal, and they do not fit in the cash payments journal. And for all those types of transactions, we still use the general journal. And if you notice this 9.4, this is for work together and on your own. Okay, so it says we bought store supplies on account from designer supplies. Well, why would we not use the purchases journal for buying store supplies on account?
Why would we not what?
Why would we not use the purchases journal for buying supplies on account?
Did we buy it on account?
That's what the purchase journal is used for. Take a look at your purchase journal. Why would you not use this journal for purchasing supplies on account? What two accounts are you using when you use the purchase journal? Look at your column heading. So, anytime you use the purchase journal, you debit purchases and you credit accounts payable. When you purchase supplies on account, what do you debit? When you purchase supplies, what do you debit? Supplies. All right, purchases is what? What do we use in the purchases account?
Like debit or credit?
No, like what type of transaction affects purchases when you buy what? What are you buying when you use purchases?
Merchandise.
Merchandise. Merchandise is what? Stuff you are going to sell. Supplies. Are you going to sell your supplies?
No.
No, I'm not selling my supplies. So that's why you only use purchases journal for purchases. If you purchase supplies on account, you are going to stay in the general journal. But there's a little bit of difference from what we've done in how you're going to do it. So we're going to keep track in different ledgers. We had a general ledger before, and now we're going to add an accounts payable ledger, an accounts receivable ledger to the general ledger that we're also keeping. So now we're going to have 3 ledgers instead of just the one. So instead of just writing supplies and accounts payable, you still write supplies. So this is 2013, October 5th. Supplies store is still debited. And that's for how much? 180. And then instead of just crediting accounts payable, I'm going to credit accounts payable. And then I'm going to put a slash the vendor. And the vendor is Designer supplies. For 180. What's my post reference number? Or my document number? M35.
Oh, yeah.
Okay, I'm going to tell you there's an easy trick if you get confused on what journal to use. Anytime your document or source number is a P, if it's a P, what journal is it going to go in? Purchases.
Oh,
If it's a P, it goes in purchases. If it's a C, what's that tell you?
cash.
Cash payments journal, because you're writing a check, right?
Yeah.
So P is for purchases, C is for cash payments journal, and then your general journal is going to be any type of memo. So this is an M35. If you see M35 or M whatever, you know it's going in the general journal. I say any type of memo because you look at the next one, and what's the document number? DM65.
Oh.
DM65. DM stands for debit memorandum. Yep. So what a debit memorandum is, it says, we returned merchandise to Hendrix Products. All right. And don't write this in yours. Don't write this in yours. I'm just going to write it in mine. If you purchase something, if you purchase merchandise, what are you debiting? You purchase merchandise on account. What are you debiting? You're debiting purchases. That's your account. So let's say I bought $540 worth of stuff. I would record it like this: purchases, and then I'd have accounts payable / wherever I bought it, Hendrix Products. That's $540. So that's what I would do if I bought something. If I'm taking it back, you do the opposite. So, on the 7th, I'm going to flip these. So, I'm taking it back, so accounts payable. Hendrix. Products is going to be debited for $540. And what's going to be credited? Except for we're going to add one little thing. It's not just purchases. We're going to keep track of how much we actually send back, and it's eventually going to go all into purchases, but we're going to call this purchases, returns, and allowances. Purchases, returns, and allowances is going to be credited for $540. It's just like when we closed accounts, we closed our sales, we closed our expenses, and what account did we use to close those with? Starts with an I. Income summary. So when we close later on, when we close purchases, returns, and allowances, we're going to use purchases to close purchases, returns, and allowances. But we're just going to call it that so we can keep track of how much stuff we're actually taking back. And that is a DM 65. DM 65.
So just keep, you just finish those two, 11 and 14.
You want? I tell you what, we'll do the on your own right now. All right. So October 11th. This is the on your own.
Do we need to skip down?
Nope. Bought office supplies on account from Office Express, $240. M36. The M36 tells me right away it's going where?
General Journal.
General Journal, because it's a memo. So we are supplies, office. It's M. I don't know why I put DM there. I shouldn't have. And it's 240.
Yep.
And then I have accounts payable, Office Express.
Slash, I think.
Yep. $240. And this one, we return merchandise to Fretz Industries for $12.39. DM debit memo 66. So I'm going to do the exact same thing that I did up here. I'm going to debit accounts payable, Fretz Industries, and that is $12.39. That's DM 66, and I'm going to credit what?
Purchases, returns, plus allowances.
Purchases, and I'm going to abbreviate it R and A.
That's what I paid.
$12.39.
Allowance. So,
Can we handle that?
I think so.